Super Microcomputer, SMCI, just served up one of those earnings days that feels like a season finale, a headline-grabbing full-year upgrade, numbers that beat some expectations but missed the ones that mattered short-term, and a stock that reacted like it had been invited to a surprise party, and then poked the cake with a skeptical finger. In plain English, the company scored the highest full-year guidance raise in its peer group, yet its quarter was the weakest against analyst estimates for that group, and investors were not uniformly thrilled. Who is SMCI, Supermicro? A quick refresher. Supermicro was founded in Silicon Valley in 1993 by Charles Liang and has grown into a heavyweight in server and storage systems. The company is best known for a modular building block approach. Think of Lego for data centers, standardized, stackable components you can combine into small or mega systems for cloud providers, enterprises, AI farms, and edge locations. Their pitch is performance plus energy efficiency, exactly what customers hunting high-density GPU servers and cooled racks want. The headline, biggest full-year guidance raise, but with a sting. On results day the company pushed its forward-looking picture out aggressively. In absolute terms, one of the largest full-year guidance raises you saw across the group of companies reporting that period. That kind of move signals management believes demand for its products, especially AI and liquid-cooled GPU servers, will keep accelerating. On paper that's exciting. It's the "we see a highway of orders coming" claim that growth investors crave. And yet, the quarter's actual top line and EPS came in slightly under the consensus estimates, and the immediate near-term guidance included ranges that were softer than some street models expected. The combination, a bold long-term projection while missing near-term expectations, created a cognitive dissonance for short-term traders. Reuters and other news outlets reported the immediate market reaction, a sharp intraday slide as investors focused on the misses and the traffic lights around short-term execution. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Why did the market look grumpy? Spoiler, it's a mix of psychology and math. Analysts forecast what they forecast. Wall Street models are often tuned to the next few quarters. When a firm misses those near-term marks, algorithmic strategies and active funds can hit sell buttons quickly. Missing consensus by even a few percent can trigger big flows. Reuters and other coverage show this pattern played out for SMCI. A big future number is easily dismissed as optimism. When management says, "we can hit $X in year Y," skeptics ask, how exactly? What commitments are in place? Because future targets require visible contracts, supply chain assurances, and customer onboarding, things that take time and visible proof. Investors sometimes prefer, "show me concrete POs now," to "trust us, it's coming." Timing matters, the market's time horizon is short. A company can be spectacular in 18 months but punished today if execution hiccups are visible. In SMCI's case, the quarterly miss plus the aggressive future target created a "prove-it" vibe. The gap to the upside trade, what people are eyeballing. Technical traders noticed a price gap from early August that left a visual space on the chart, a classic gap to be filled setup. Some commentators put a target in the mid-$50s, around $57.50, as a level that the market could revisit if the bullish sentiment returns and the stock fills that earlier gap. In short, if SMCI shows renewed momentum, traders will say, "we're filling that void," and the price could push up into that zone. Why does a gap matter? Imagine you walk into a kitchen and there's a fresh slice of cake missing from the plate. Your brain wants to fill that missing information. Traders behave similarly. A gap often indicates a previous imbalance, big buy or sell event, and subsequent moves tend to fill that space as supply/demand normalizes. If SMCI's sentiment turns bullish again, that $57.50-ish level becomes a natural magnet in the short-term trading narrative. How filling that gap could actually soar SMCI, 3 channels of lift. Momentum cascade. once the stock moves up and tests that $57.50 zone, momentum traders and momentum ETFs will notice. Momentum begets momentum. Money flows that chase performance can push the stock further, particularly for a name already popular with retail and quant strategies. In plain terms, a few good days can attract more buyers who don't want to miss the move. Narrative change equals valuation re-rate. If management's long-term targets start to look credible, through large customer wins, better than feared gross margins, or improved near-term guidance, analysts will tweak forecasts upward. Upgraded analyst models can change the multiple the market is willing to pay, turning a headline metric like revenue guidance into a higher price tag. Short squeeze possibility. Remember that many traders shorted the stock after the disappointing quarter. If the stock gaps back up and shorts rush to cover, that short covering flow can exacerbate the upside. The result can be a quick pop, sometimes dramatic, as demand to buy shares outpaces immediate supply. Market commentary has flagged exactly this dynamic as plausible for SMCI that could hit Smci to $570 in coming years. Think of SMCI as a band playing to an audience. In July the band announced an ambitious world tour, the big guidance raise, big arenas, bright lights. But their latest rehearsal, the quarter, had a few flat notes, a missed cue here, a slightly out-of-tune verse there, the revenue/EPS misses. Critics and the press wrote mixed reviews and some fans left early, the immediate sell-off. Note this as well. When his disciples heard it, they were exceedingly amazed, saying, "Who then can be saved?" But Jesus beheld them, and said unto them, With men this is impossible, but with God all things are possible. Then answered Peter and said unto him, Behold, we have forsaken all, and followed thee, what shall we have therefore? And Jesus said unto them, Verily I say unto you, that ye which have followed me, in the regeneration when the Son of Man shall sit in the throne of his glory, ye also shall sit upon 12 thrones, judging the 12 tribes of Israel. And every one that hath forsaken houses, or brethren, or sisters, or father, or mother, or wife, or children, or lands, for my name's sake, shall receive 100-fold, and shall inherit everlasting life. But many that are first shall be last, and the last shall be first. Matthew 19:25-30. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this, I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today, your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.